What's up, crypto fam, and welcome back to Bitcoin Bulletin. We're kicking things off with a bang as Analyst TechDev drops a bombshell visualization comparing Bitcoin's price cycles with broader business cycle trends. Are we entering a parabolic phase? TechDev's chart suggests Bitcoin is in a bull ramp zone, historically preceding massive advances, and if the business cycle flips positive, we could see Bitcoin explode into its bull parabola phase. This could be the launchpad to new all-time highs. Next up, the options market is buzzing. Dawson from Derive says Bitcoin and Ethereum rallies are only halfway done, with traders looking to a year-end push. Despite historical September slumps, supportive macro trends and options data show bullish positioning, with call open interest for Bitcoin vastly outnumbering puts. Could we see Bitcoin hit $125,000 or even higher by year-end? Let's dive in. But is the rally sustainable? Bitcoin is consolidating gains above $115,000, and analysts are watching closely. Will BTC break through the $116,500 resistance zone, or could we see another drop? We've got the key support and resistance levels to watch, plus a look at the technical indicators that could signal the next big move. Stay tuned. And finally, the ETF wars. In August, Ethereum ETF inflows crushed Bitcoin ETFs, outpacing them by over $2 billion. This massive shift shows institutional investors are increasingly favoring Ethereum, potentially positioning it to overtake Bitcoin as the top institutional crypto product. We'll break down the numbers and explore what this means for the future. Don't go anywhere. Make sure you're subscribed and the notification bell is on. Bitcoin's next parabolic run. Analyst TechDev links cycles to macro trends. Is Bitcoin on the verge of another explosive parabolic advance? Analyst TechDev has just released a powerful visualization that draws a direct line between Bitcoin's historical price cycles and the broader business cycle, suggesting we might be entering a critical phase. The chart overlays Bitcoin's price action with economic peaks and reversals, color-coding different stages. Currently, Bitcoin appears to be in a green bull ramp zone, showing steady growth even as the business cycle weakens. Historically, this phase has been the precursor to Bitcoin's most significant parabolic surges. If the business cycle begins to recover, TechDev's model indicates Bitcoin could transition into the red bull parabola zone, where economic expansion and price growth mutually reinforce each other. This framework is particularly compelling because it bridges macroeconomic forces with Bitcoin's inherent four-year halving cycle. Past bull ramp phases have consistently served as launchpads for Bitcoin's most dramatic price increases, propelling it to new all-time highs. TechDev poses the crucial question: where are we now? The answer hinges on Bitcoin's ability to maintain its upward trajectory until the business cycle turns positive. If history is any guide, this alignment could trigger Bitcoin's long-awaited parabolic breakout. This analysis is electrifying the crypto community, with many seeing it as a strong signal for renewed bullish momentum. Traders are closely watching Bitcoin's price action around critical resistance zones, with many anticipating a significant upward move if these levels are breached. The connection to the global business cycle adds a layer of fundamental weight to the technical picture. Don't change that dial. The market is heating up, and we're just getting started. Next, we'll uncover if the current rally is only halfway done and what options traders are betting on for year-end. Halfway to the moon, options traders eye year-end Bitcoin and Ethereum rally. Could the current crypto market rally be just the beginning? Dawson, head of research at on-chain options platform Derive, believes that despite some headwinds, Bitcoin and Ethereum are only halfway through a potential fourth-quarter upswing. He dismisses speculation that we've already hit the cycle's peak, pointing to supportive macro trends and intriguing options data. While September might bring increased volatility due to historical seasonality and the U.S. financial year-end, Dawson suggests the latter half of the year could see significant upside. Dawson highlights the market's shifting expectations regarding interest rates. The probability of multiple rate cuts by the Federal Reserve in 2025 has surged, a scenario that typically favors risk assets like cryptocurrencies. Options data supports this optimism, with call open interest for Bitcoin significantly outnumbering puts, indicating traders are betting on price increases. Specifically, market consensus suggests a 37% chance Bitcoin could reach $125,000 or higher by year-end, while Ethereum has a 40% chance of closing above $5,000. This outlook is generating buzz across the crypto space. Both Bitcoin and Ethereum have shown resilience, posting gains this month against historical trends. Investors are closely monitoring these developments, looking for confirmation of a sustained rally. The potential for rate cuts and strong institutional positioning in options markets are key factors fueling this renewed optimism. But is the rally poised for a breakout, or are we heading for a correction? We'll break down Bitcoin's current consolidation phase and reveal the key levels to watch next. Bitcoin consolidates above $115K. Bulls eye breakout or bears prepare for drop. Bitcoin is currently consolidating its recent gains, trading above the crucial $115,000 mark, leaving traders and analysts on the edge of their seats. The question on everyone's mind is whether BTC is gearing up for another significant move higher, or if this consolidation is a prelude to a pullback. The price action shows bulls successfully pushing past $115,000 and $116,000, reaching highs near $116,743 before entering a consolidation phase. However, a minor dip below $116,000 and a brief spike below the 23.6% Fibonacci retracement level indicate potential resistance. Bitcoin is now hovering around $115,000, trading near its 100-hour simple moving average, with a bearish trend line forming resistance at $116,000 on the hourly chart. Immediate upside resistance is seen at $116,000, followed by a key zone at $116,200 and potentially $116,750. A decisive close above $116,750 could propel Bitcoin towards $117,500 and beyond, with $118,500 and $118,800 as subsequent targets. On the flip side, failure to break above the $116,200 resistance could trigger a decline. Immediate support lies near $114,900, with a more significant support level at $113,750, coinciding with the 50% Fibonacci retracement. Further downside could test the $113,000 zone, and a break below the main support at $110,500 might lead to a sharper sell-off. Technical indicators are showing mixed signals. The hourly MACD is losing momentum in the bullish zone, and the hourly RSI has dipped below the 50 level, suggesting a potential cooling off of bullish sentiment. The market is keenly observing these levels, with major support identified at $115,000 and $113,750, while resistance is firmly placed at $116,200 and $116,500. The outcome of this consolidation phase will likely dictate Bitcoin's short-term trajectory. Get ready for a seismic shift in the ETF landscape. We're about to reveal which crypto asset is dominating institutional inflows and leaving Bitcoin in the dust. You won't believe the numbers. Ethereum ETFs skyrocket past Bitcoin, a $2 billion August inflow surge. The balance of power in crypto investing is dramatically shifting, and the latest August data reveals a stunning surge in institutional interest, with Ethereum ETFs vastly outpacing their Bitcoin counterparts. U.S. spot Ethereum exchange-traded funds experienced net inflows of an astonishing $729.1 million on a single Wednesday, marking the second-largest daily inflow since their inception. This inflow alone significantly dwarfed Bitcoin ETF performance, with Ethereum-related products collectively attracting over $2 billion in the last 3 days, approximately 7 times the amount flowing into Bitcoin ETFs week-to-date. This massive inflow into Ethereum ETFs, including substantial contributions from BlackRock's ETH, $500.9 million, and Fidelity's FETH, $154.7 million, underscores a growing institutional conviction in Ethereum as a core asset allocation. Analysts suggest this success could pave the way for more Ethereum-based financial products and further institutional adoption, potentially positioning Ether to overtake Bitcoin as the leading institutional crypto product by year's end if current trends persist. The ease of access provided by ETFs allows asset managers, pension funds, and corporate treasuries to gain exposure to Ethereum without the complexities of direct custody. The excitement isn't limited to Ethereum itself. Speculation is extending to emerging altcoin projects within the Ethereum ecosystem, such as Dawson Finance, which is gaining traction due to early whale accumulation and strong community backing. Whispers of potential exchange listings are adding urgency for retail traders, making projects like Dawson Finance a focal point for those seeking the best new crypto opportunities in 2025. This rotation into Ethereum and related altcoins highlights a broader diversification strategy among institutional and retail investors alike. That's all the hot news for today, but we've got a lightning round recap coming up. Stick around for the essential takeaways and our full call to action. And that's a wrap on today's Bitcoin Bulletin. We saw Bitcoin potentially entering a parabolic phase according to TechDev's cycle analysis. Sean Dawson predicts the rally is only halfway done, with options traders eyeing year-end gains for Bitcoin and Ethereum. Bitcoin is consolidating above $115,000, with key resistance levels to watch. And in a massive shift, Ethereum ETFs saw over $2 billion more in August inflows than Bitcoin ETFs. Don't miss out on the next big crypto moves. Like this video, subscribe to Bitcoin Bulletin for more daily updates, hit that notification bell so you never miss a beat, comment below with your thoughts, and follow us on all our social channels.